In our Economy Watch, higher interest rates are likely to have a major effect on the economy and personal savings. Joining us now is Sam McElroy. He's the co-founder of At Financial Investments. So what do you think, Sam? What's your forecast for interest rates and the effect on retirement savings?
Yeah, I think it's going to be a very interesting year. A lot of what we've seen, or what we're predicting for this year, is that assuming that there's not a total market collapse, I'm expecting that we're going to see interest rates continue to increase marginally. If that tends to happen, I think that it may not be a great year for bond funds, but I think it could be a good year for other sectors of the economy. In terms of which sectors, I think it's going to be much like the sectors that we saw last year in 2018, where if there is a strong growth in the economy, it's probably still going to be coming from technology and some of the other places like that. But I think that we may see more volatility, sort of like we saw towards the end of the year last year, and so investors probably do want to be very careful kind of going into individual stocks or where they're putting their money. I think they just want to brace for some uncertainty and be in it for the long game, especially throughout the course of this year.
Will it be a good year to keep some money out of the market and hold in cash?
You know, I think for people that can afford to do so, that's always a smart play anytime you see increased volatility. People always say that when you make money in the market, you make it by buying in at a low point, and it's only possible to do that if you have money that's not in the market when the market goes down. So for people that can afford to not be fully invested, meaning that they're not living off of the assets or trying to take money out of an account, having some money positioned for market reentry is always a good opportunity in a volatile period like what we've seen towards the end of the year last year and potentially for this year.
Before you take off, what sectors are you watching?
You know, it's hard to say. Typically when the market starts to slow, I think consumer discretionary is probably one of the areas that tends to get hit a little bit harder. And if you're going to see some credit issues, I think looking sometimes at small cap or mid cap companies that maybe don't have the reserves that larger cap companies do can also be a potential area for problems.
Good to get your perspective, Sam. Thank you.
My pleasure.
Check out businessfirstam.com to find out where to see our entire show. And don't forget to like, follow, and share Business First AM.